Hi, fellow traders. I hope you guys had a great holiday. I know I did. Always enjoy my time hanging out with my family. That's why I do what I do. So we have the opportunity to do these things. So I hope you guys had just as much fun and you got some rest and you're ready to come back and tackle this market. Now, I'm going to recap last week, recap the trade on Friday. I know a lot of people I got a lot of questions about KPTI and some of the things that I said on Friday. I'm going to clear a lot of that up. Hopefully, you can understand the observations that I was making. And I've got a very important lesson for you. Well, a synopsis of a lesson. It's what we're going to be going into this Wednesday for the roadmap to success and potentially next Wednesday. Just depends on how many questions I get and how well you guys receive that lesson. So stay tuned for that. I got all that coming up. But what you see here, this is the hook from Carrie Underwood's song, The Champion. And this is the song that I've been playing the last couple of weeks. You know, if you have been an athlete or you've observed athletes, you always see them with their music on, their headphones on, pre-game. A lot of them have playlists or music that they listen to that helps pump them up. Now, I remember when I was in high school, when we would ride the bus to the games and we'd have to sit and wait for like the JV and the girls to play, we all had our little Walkman. Back then we had the Walkmans, we had to make our mixtapes, and that was a big thing. And so everybody would have their own playlist and music that would get them pumped up. And that's it's kind of spilled over into my adult life. So these songs I listen to, they change based on what I'm going through, what I'm dealing with. Sometimes I'll listen to motivational speaker. I may listen to ET in the morning. Just depends on what I think I need. But the last couple of weeks, this is what I've been listening to. And really, this is a great song. If the market has just been beating you down and you're really down on it, this is a great song. It's called The Champion. And I just play it on, the video is awesome. The video for it is really awesome. So I just play it on YouTube every morning before I get my day started. And, it's kept me positive through the slowdown in the last couple of weeks. So just wanted to share that with you. All right, so KPTI. Yes, on Friday, this was the only stock. There were two stocks that showed up on our scan. Both of them were relatively inexpensive stocks. One of them didn't have shares to short, and it was looking short, so not on our list. This KPTI looked really interesting because on Wednesday, before the market closed, it had this huge run up, a big run up, and it was gapping up that morning. So oftentimes when you have you have a huge run up and then it gaps up the next morning, you're going to get some profit taking. And I thought, and I really felt we could get some profit taking back to the 200 here. And that's kind of what I was looking at. So the first thing I was noticing at the open was that we were crowded. And what I meant by we were crowded is that we had abnormally high volume. Now, the day before, it traded 15 million shares. And that's where that spike comes from. And that's not bad. That's whenever you have a stock that has a catalyst, a pretty good catalyst, you're going to trade a lot higher volume. So 15 million shares was not that crazy. But on a Friday, the day after a holiday, we've got 15 million shares traded by 10 o'clock, before even 10 o'clock hits. I knew it was going to be somewhat crowded. I had no idea it was going to be that crowded. So when I was saying crowded, I was talking about how much volume is in it. Look at how much volume this thing traded on Friday alone. Just over 40 million shares. And it averaged about 1 million shares prior to this Wednesday move. And the float is just at 50 million shares. We almost traded the float on Friday. So this is typically what you see with these lower price, lower float stocks. You'll see them get crowded and rotate their float. This is just, one of these anomalies, and I tend to stay away from these. But when I traded this, I didn't anticipate this happening. When I got in this, I had no idea we were going to get this heavy, but I stuck with it because it was trading pretty good. So that was the first thing I wanted to bring up on this. Now, this was a textbook 5-minute opening range breakdown. Now, I'm sorry, the resolution on this is kind of small because I was trading on my laptop and I wasn't home, and I don't know why the resolution is kind of crazy on it, but you could barely see. Here's the entry right here. This was a 5-minute opening range breakdown, right under the 50, right under the 5-minute opening range, and we were looking for a move down to the pre-market lows, and I was going to take half off, on the way down. So I got one cover here. That was a perfect, I was scaling out. And the next one, I thought about taking some here, but then I said, no, I'm going to give it to 930. This is the pre-market low. So I had a order out at 930. And it didn't seem like it was going to get there, so I changed it to 935. Came within a couple of cents of it, like 2 cents. It never hit. And so as it started to rip up, I went ahead and took some more off. Because at this point, I didn't know if this was it. We've seen these turn around and rip back up and keep going if it doesn't, test the pre-market low. But I knew the 100 was sitting here too, so it was probably going to hold here. Here was a daily level here. So I felt we found support, and we did. You could see that we found support here. But it was still pretty weak. You see the 9 was coming in, the 20 and the 50, everything was good. And ended up, this was my next target, was just under 9. I was putting these targets about 10 cents off a level because I just have a phobia now of things bouncing 5 to 10 cents away from my level and I'm not getting covered. So I'm being conservative and I'm foregoing at least 10 cents, 5 to 10 cents from the level to ensure that I get profit. And it'll probably change and go back to normal once I have more confidence in the market. But that's where we were. So the big question that I got, and what a lot of people were fussing at me about, not necessarily with me, they were pretty distraught because they got stopped out on this. And everyone that I actually physically talked to or chatted with, eventually gave me, I knew what happened. I knew exactly why they stopped out. It wasn't because it hit their stop. It was because they were watching their P&L. They were in, they were up a couple $100. Well, depending on what their share size was, if you were in 1,000 shares And I did tell you what I was going to go in, and I typically don't do that in chat, but I did tell you, and this is the reason why. If you went in 1,000 shares on this and you saw that you were up, what, maybe $200, I don't know how much this move was, and then you turn around and you start to see yourself go negative $150, $175, your natural human emotion is going to cause you to take this trade off. Okay, you're going to cut it because you think it's going away from you, and you were up $200 and now you're down $150, $175, and you don't want to lose any more money, and you take it off. You don't stick to your trade plan, or you didn't even have a plan to start with, and it causes you all of these issues. So this is what we're going to talk about today. How to, number one, you could easily fix this by not watching your P&L. Number two, you could fix, the next thing you want to do is make sure you have a logical stop, that it makes sense. And, that's what we're going to talk about here in a minute. But this was the big thing here, that, man, I got stopped out on that pop. And some of you got back in here. And, on this move here, some of you stayed engaged and got back in. And that was awesome. But we are going to address this stop thing here. So what it did, I had to leave. We were checking out and I had to leave. And I just had to put this on autopilot. So I set my stop back up here at break even, and just set profit targets for this thing. And they were conservative because I wanted to make sure that we hit these targets. So this one was just above red to green. This one was just above the 200. Now this actually taught me another lesson, because I always try to figure out when I have these longer trades and I'm using the daily moving averages as maybe my final target, and it comes within like 10 cents, 15 cents, and it doesn't even come close to it. What I never realized is that this thing actually moved during the day. This was at 8:44 at the open. So this target was based off of the 200 at the open. This is the 200 at the close on Friday. So it dropped like 14, 15 cents. And so I was kind of sitting here waiting for if I had moved this down and started looking at this later on in the day, I might not have hit this. It would have maybe bounced or come within a couple of cents and kept going. But because I based my profit target off of where this was at the open, I'm sorry, I got completely backwards. I'm sorry. This is what it was at the open. At the close, it was around 8:44. So had I put my target down here, I never would have hit it. So me putting it up here at like 850, saying, okay, maybe it may not make it down here, but it'll at least get this $50 mark. That's why I put this target here. But at the end of the day, this was at 844. And that would have made sense because it actually hit that level. It didn't hit the level it was at the open. So what I figured out is whenever I do this, I need to adjust that final target along with, if I'm using the daily level, then I need to adjust it based on that daily level. There's nothing wrong with adjusting your final profit target based on market conditions, because number one, you've probably been in the trade half the day, so the market conditions are going to change, and that's going to dictate to you how you need to adjust your trade plan. But that was what I kind of learned. I didn't even think about it. I mean, it happens every day, but I didn't even think about it until I noticed this when I was looking at this trade that night. So hopefully I didn't confuse you. I started out backwards, but hopefully that made sense. All right, so not a bad day. This was on autopilot the second half of the day, just letting it run and hit targets. And this is exactly what summertime trading for me is like. This is the way I like my summertime trading to be. Catch some good volatility in the morning and just ride the trend the rest of the day. Low stress. You don't have to worry about anything. You could go out and do whatever you want to do and just let the trade work. You don't have to sit here stuck to the chart every tick. And, all of that creates emotion, and it causes you to make bad decisions. So just what I like to see. All right, so what I want to kind of cover real quick is using a stop loss. This is where I get most of the anxiety, the attitude, the frustration in the morning is dealing with the stop. And some people will define their stop for themselves. Some will try to use the stop that I use. And in reality, you have to use it for you. Now, this is just an excerpt from the whole class that we're going to start on Wednesday. But hopefully this will get you to understand what I'm looking at and what I'm thinking about and what you should be thinking about when you're dealing with a stop loss. So being in a losing position is inevitable. Okay, we're going to be in losing positions. But we can control how we react. And like I said, the first thing is turning your P&L off, because that is going to mentally connect you with and psychologically connect you, and it's going to cause you to make bad decisions. So what can we do when we're caught in these situations? We can cut losses quickly, but there has to be a process to that. If the trade is going against you, you just don't cut it off just because it's going against you, and then it turns around and starts to work in your favor. It doesn't make sense, Or we can hold it and look for the market to turn in our favor finally. So the question becomes, how do we decide when to cut it or when to let it work? Like I said, it's a process or a strategy that you have to have that allows you to do that. So let's look at how a professional trader handles this situation. All right. So what's the first thing a professional trader does when they look to get into a position? What's the very first thing? They define their risk. They're going to look at the trade and determine how much they're willing to risk to determine whether the trade is going to work or not. That's the very first thing that they do. And this is where our similarities end between a big-time professional trader and we small retail traders. But the number one rule before we take any trade, we have to define our risk. If we don't, we're setting ourselves up for failure. So we have to determine how much we're willing to risk. All right, so we have to determine how much of our account we're willing to risk on any given trade. In my larger account, this doesn't phase me. But in the smaller account, I have to only risk a certain percent, and it's 3 to 6%. So, for instance, if I'm in a trade for 1,000 shares, and I want to risk, and my max loss is 300 shares. It's $300. That's the most I'm willing to risk on any trade, no matter what, because of my account size. And let's say I'm in a $5,000 account. Now, I can't give a stock 50 cents. And I can't, if I'm in 1,000 shares. I can reduce my share size to where that can make sense. But we have to be careful of how much we risk. If I'm in a $2,000 account and I'm in 1,000 share position and I'm giving it 50 cents, all it takes is 4 trades and I'm wiped out. If I lose 4 times in a row, I'm wiped out. And we can't allow that to happen. So this is one of the toughest parts about trading a smaller account, is because you do have to risk a larger portion of your account, but that risk is going to be a little bit smaller, and it's going to handcuff you a little bit. You're going to get stopped out of more trades than the average person would with a fully funded account, because you're in a smaller account and because you have to manage your risk and limit your losses. But there is a way to do it and to come out on top. And that's what I've been trying to teach you guys and show you guys every day. All right, so stay tuned. There is a twist. All right. So how do we manage this in a trade? We use stop loss orders. I know it's a bad word because nobody wants to talk about loss. Growing up, our mindset and what we were taught is that if we think about winning, we're going to be a winner. If we think about losing, we're going to be a loser. But the reality is, this is the big man's world, a big person's world, and losses are a part of it. Things are not going to go our way, and we have to be prepared to deal with it, or it's going to set us in a downward spiral that we will never come out of. All right, so having a predetermined point of exiting a losing trade, it not only provides the benefit of cutting losses so that you can move on to new opportunities, but it also eliminates that anxiety, that frustration caused by being in a losing trade without a plan. And what this does is it keeps you from jumping out when you shouldn't be jumping out. It allows you to be stuck to have a plan that you can stick to. All right, so just right off the top, a stop loss order is an order placed with your broker to buy or sell a stock once it reaches a certain price. Okay, and it's designed to limit your losses in the market. Now, we're not going to cover the stop loss orders right now. That's part of the class. What I want to share with you real quick are the types of stop losses. So, and what you should be looking at to figure how much you're going to risk on that trade. Okay, so we talked about the percentage, right? That we can risk 3 to 6%. Now, the reason why I've got this X'd out is that's not what you want to base the final your final stop on. You want to use that number to plan your trade, but you don't want to just use that percentage and say, hey, it doesn't matter what this thing is going to do. I'm going to risk $300 and that's it. The reason why you don't want to do that is because the chart, the technicals on the chart will tell you what to do. It will tell you if that position is dead or not. And we're going to use this KPTI trade. We're going to look at this in a minute and kind of give you an example as to what I'm talking about. Volatility. You definitely want to use the volatility. What's the average range that the stock is moving? If the stock is moving on average 50 or 60 cents every candle, if you put in a 30-cent stop, you're going to get stopped out. There's no ifs and buts about it. You're going to get stopped out. So your stop is going to have to be outside of that volatility window. And I'll show you how we measure that. Time should never be an issue, should never be a factor. As we've seen, when you're trading these trend following trades, sometimes it takes a while for it to break down. And if you set time limits, you're going to stop yourself out before the trade actually works. So time is not something that I would even consider using. So let's look at this KPTI, for instance. All right, so we get in here, 5-minute opening range breakdown. How do we figure out where our stop's going to be? All right, so we know my max loss is $300 based on my account size right now. It's $300. It's going to be back at $150 next week because I'll be back at $5,000. But at this point, this was $300. It was $300 max loss. Okay, so I'm not going to set my stop at just $300. That's not what I want to base my loss off of. That's my max loss. That's to protect me just in case the stock gets away from me. What you want to base your stop on are the technicals on the chart. The technicals are going to be what tells you whether your trade is going to work or not. For me, I'm basing it off of an opening range low. Here's the opening range low here. So if a stop goes back and closes above this level and then confirms by trading higher, that means we've claimed this level and I'm going to take it off, regardless of whether it hit my max loss or not. So the technical stop is what's going to tell you, is this trade technically still in play? If the technicals break down, and my strategy is based on technicals. Now, if your strategy is based on fundamentals, then you would use something else. Mine is based on technicals. The technical level on an opening range breakdown is the opening range low. So even though this candle ran up 30 cents on me and I have a $300 max loss, I'm in 1,000 shares. So yeah, 30 cents would stop me out. But there's another element to this that I'm going to show you here next. And that's the volatility element. All right, so we never closed above this level. This candle opened above this level, pushed up, but never closed. So the technicals never broke down. And guys, the big money guys, they only make money when we lose money. So their job is to move these markets in a way that spooks us out. Here, it spooked a lot of people out. Here, it spooked a lot of people out. If you don't trust the technicals, you're going to get spooked out, period. So technically, this stock never broke down, and there was no reason for me to get out. And that's how I was able to have a winning trade. So so let's look at, now this is the technical level. Hopefully I kind of explained that, but again, I will get deeper into this on Wednesday. Okay, let's take a look at the technical aspect of this. Okay, here's a 5-minute chart on KPTI. How do I figure the volatility stop? Meaning, how much room do I need to give this stock to work? It has to be based on the volatility of this individual stock. I use the ATR. Now, I used to use the 5 bars, the 5 previous bars, and for some reason I thought the 5 bars was 30 minutes, and it's only 25 minutes. So I had to go to 6 to make it 30 minutes. For a long time, I used 5 thinking that I was using the last 30 minutes. But what I do is, once I get ready to enter, I just hover over this candle. And you can see right here on the right, when I do that, you'll see what the ATR is for the last 30 minutes. The volatility on these candles, the average volatility on these candles for the last 30 minutes is 30 cents. All right, so if I put my stop at 30 cents, I'm still at a risk of being stopped out. You have to give it a couple of cents above that. So if I wanted to go in 1,000 shares, and let's say this was at 50 cents, I would have to reduce my share size in order to make this stock work. This is how I factor in how much size I'm going to put on the stock, because it's going to be based on the volatility of the 5-minute candles. How much room am I going to have to give it? Because if I go in and this thing is $1 and I put in a 10-cent stop with this huge position size, I'm going to get stopped out every time. And so that makes absolutely no sense. So here, the decision was, yeah, I'll give it 3 cents above my entry. I'll give it 3 cents above my max loss stop. You know, I'll take the hit, an extra 30 to 40 cents, just to make sure that this thing had enough room to work. Ideally, you want to give it 10 cents more, but I wasn't going to give it an extra $100. I wasn't going to do that. So I couldn't. And I felt confident that we were going to come down because of this move it made. And so if you hover over this, you can see it got up to like 33 cents over here. But it never really got out of that range. So I used the ATR to help me determine how much room I need to give a stop. Okay? That's just what I do here. And it works. So, like I said, we'll go over this more in detail. Now, I do cover it in some of the classes, but we're going to specifically talk about stop losses and the stop loss orders, and then the different types of orders. Now, all of that stuff's coming that we're going to start on Wednesday. So I hope you guys understand this. If not, shoot me an email or question. I'll make sure I either answer you, or if it's something that you really need to see me cover in the class, I'll let you know. All right, so let's look at how this week ended. This should be pretty quick. Not much to write home about. Not much to write home about. This was a 3.5 day week. Really, really slow. Unless you were in the right place at the right time on certain stocks, you just didn't benefit. So only 604.85 for the week. Puts me just back below 25K for the year. Um, we'll look to eclipse that and just keep moving. That goal is dead. We're just moving on to bigger and better things. So that's where we ended up for the week. Friday was just that big day with KPTI, and that was, a surprise. It just came out of nowhere, which I think is another reason why we were so crowded, because we just came out of nowhere with it. And everybody was trading that one stock, seems like. So our equity curve is, we had the little pullback here. We're starting to come back. We need to break this high this week and keep on trucking. So we're looking to right this ship here and continue making that march upward. And I will have the activities calendar posted. I went a whole month without even posting one for some reason. It just never occurred to me. But we'll post the activity calendar as well as the new profit stuff here a little bit later today. All right, so that's it. I hope I answered a lot of your questions. Like I said, if I didn't, shoot me an email and I'll get it handled for you. So you guys take care. Enjoy the rest of your weekend, and I will catch you on Monday.